Hello guys, welcome to our channel. The videos we make on this channel focus largely around various types of investments like ASX stocks, US-based stocks, as well as cryptocurrencies such as Bitcoin or Ethereum. We analyze and look at various other analysts and figures in the space, look at how they are valuing investments, and analyze and predict ourselves.
So June was the actual damage, right? That was basically the nuke button to say, leverage and crypto, as we've always talked about, don't go together, right? So that blew up, massive balance sheets, Three Arrows Capital, all of them. But one of them was hidden, and we didn't know, and that was Alameda. We knew they were a massive shop. We knew they were kind of a bit sketchy, but they kind of said it's fine, but they weren't fine. So at that point, they were probably $9 billion in the hole, which is a staggering amount of money. Now, we don't know the exact numbers yet, and we won't do for a long time, but there were a staggering amount of money in the hole. And that was papered over by FTX. They gave them FTT tokens, which is the token that is part of the FTX ecosystem that they control, and Alameda control, and then gave them a loan against it. That's what it first appeared, but the plot's thickened a lot since then. But that's, so basically they actually went up under in June. So what we're seeing now is the end of the June thing. It was the bit that didn't happen that did happen, if you know what I mean. Gone through this, which was the banks used to be trading firms and would have customer. And there's famous shops like Salomon Brothers who were huge at this. And then what happened is they would abuse that because they wouldn't take the customer money. Well, they kind of would because it's all the same balance sheet, so the bank might blow up. But they would also trade against the customers. And then the regulator said, no, you're not doing that. Then 2008 comes along, so you've now got what's known as customer and house, and there's a Chinese wall. The wall means you two can't speak to each other because you have privileged information if you're advising, or you have balance sheet, etc. And you guys with the customers, we can't give it to the rest of the firm because we would abuse it. So that is fine, except that in 2008, the trading side blows up of the banks, and the customers are going to get hurt because everyone have to get bailed out. So then they changed the regulations and said trading has to be a much smaller part. In crypto, none of that exists. You can do whatever the fuck you want. I don't even know what he was doing was illegal. I'm not even sure using customer deposits is illegal in crypto.
Whoa.
Because Gary Gensler and others had not regulated. It depends what jurisdiction and how far their regulations got. But this is a problem. I mean, I got caught out in another one, a futures brokerage. I mean, this is not a crypto thing. This is a fraud, leverage thing. I got caught out in MF Global, which was a huge futures broker, and it was run by the ex-CEO of Goldman Sachs, who was the senator for New Jersey as well. I mean, this guy was one of the most powerful people in the world, John Corzine, super famous. So I have my entire trading funds with them because it's John Corzine, it's MF Global, the biggest brokerage firm in the world. He gets confused and kind of thinks he's Goldman Sachs, takes a huge bet on European government bonds, blows up, and lo and behold, he's been using customer money. So it happens endlessly in the securities industry because that little pot of gold, which is customer money, people just can't keep their eye on the precious that's over there. They want it, they can use it, I can make return on capital, and then it goes wrong. So this story's as old as the hills. It's a deep fraud. It seems it's now on the scale of Bernie Madoff and Elizabeth Holmes and Enron. It's an accounting fraud. It's a cult of personality fraud.
Before we continue, click that YouTube like button and subscribe to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring, and now let's continue.
It appears. Again, we don't yet know, but as the news flow comes out. So there is an expression, Warren Buffett's used it, is when the tide goes out, you see who's swimming naked. So the tide out in this is liquidity. And liquidity is driven by central banks trying to stop inflation. So they raise interest rates when they think there's inflation. It slows down the economy. It's harder to borrow money. The whole economy slows down and we restart. It's called the business cycle. And you and I have talked about this in the past. So the economies are cyclical. They're naturally cyclical because the credit cycle, even without central banks, is you kind of lend or borrow too much money, then something happens at the margin and you're like, oh shit, I borrowed or lent too much money, and you pull it all back again and then you do it again, right? So the central banks try and soften that cycle, but they still create it and use it to try and not let economies go too far, like hyperinflation or depression, whatever it is, right? So that's what they're trying to do. That cycle drives the movement of asset prices. And so that's the stock market, the bond market, equity market, the currency market, the crypto market. And with that cycle becomes the human emotion cycle. And the human emotion cycle is, I'm making a fortune, I'm a genius, I can never go wrong, I'm going to be rich, extrapolate, future vision of myself is now going to be driving a Lambo and, etc. And if you think about it, and that's exactly what happens to all of us, and we have to fight that demon, is you start extrapolating out and you start thinking, my vision of my future self has now been ratcheted up. So investments are just a manifestation of your future self, right? That's what we're trying to do. So you got that vision of what you'd like to be, and to get there, you invest because that will deliver that. So if your investments do well, you start stupidly readjusting yourself higher all the time. So then what happens is when the market goes against you, you have to go through the emotional inner journey of, oh, maybe I won't get there, right? That's really hard for people. It's emotionally really hard to kind of plant a flag on that's what my future is definitely going to be, definitely, because I'm really good at this investment game, to I was completely wrong. And what happens is you then over extrapolate on the downside. If this continues, crypto is going to zero. All of my savings that I've been dollar cost averaging, listening to Tom and Raoul, it's all bullshit. This has been a scam. It's the exact opposite. But when you step back, you take a nice logarithmic chart of Bitcoin, and anybody can do that on TradingView or any of those charting things, and it's a nice, smooth, upward trend, which is the adoption of cryptocurrencies and blockchain technologies as a new financial system and a way of exchanging value on the internet. In the middle of that, on a log chart, it just looks like it slowly does that. On a linear chart, it looks like this. But no, it looks like more correct, it does this, collapse. And what happens is everybody goes, when it goes up on a linear chart, everyone goes, it's a bubble. People who aren't involved. Then we all get to the over extrapolation of like, we're all going to be billionaires, let's order my Lambo. Then it starts coming down, it's denial, typical, the human phases of emotion. And then you get to anger and despair, which is where we are now.